Hello, everyone. Welcome back to the Social Ledger Report, part of the Boost Network. This week, we have a lot of things to talk about. So, for one, Bitcoin has dropped from 73,000 as of March 16 to about 66,000 today. Fear and greed is just in the gutter. The mood that I want to set here is we're going to cover the top three topics on crypto and financial world that's been happening, like all the financial world stuff that's been happening. Everyone's scared, but we're actually going to deep dive into it and see if it's like actually within reason to be scared or not. So, for the first subject, we're going to talk about Fannie Mae, which now accepts crypto-backed mortgages, and then the SEC and the CFTC have better guidance. Plus, the Clarity Act has been making a lot of movement, which is largely due to why Bitcoin has been just in the gutter. And then the last story is just Solana Developer Platform, which it actually launched and it has some pretty high noteworthy partners. So that one's a little bit less fun, but it's a big opportunity. But before we get started, go ahead and like the channel. Go ahead and like this video, subscribe to the channel. It helps us grow and let us know what you think. All right. So for the first segment, Fannie Mae, crypto-backed mortgages. We have a headline here. I should probably share my screen and kind of just have that there. All right. So Coinbase, this is from CoinDesk. Coinbase, Fannie Mae bring crypto-backed mortgages to homebuyers. The crypto exchange is working financial technology mortgage firm Better, a Fannie Mae-approved mortgage seller. So I'm 28. I don't have a home yet. Leon, I have a question for you. You as a homeowner, how do you feel about this? Do you feel like this could have helped you long ago, or do you think
Uh,
if I new home now, will this help you?
I don't know how I feel about it. Like this is huge for like long-term holders and really the diamond hands. There's no taxable event for selling the crypto when you do it, but you are getting two loans on close. You get a down payment loan for the crypto as the collateral, and then you are getting another, the regular Fannie Mae mortgage backed loan um, out there. So you are getting two, and then whatever collateralized Bitcoin, or is it Bitcoin and USDC? Yeah, Bitcoin and USDC goes into like an escrow account that's held by Coinbase and Better Mortgage, or Better, what was the company? Yeah, Better Mortgage, and they hold that for the life of the loan. So if you want to lock up some Bitcoin for 30 years, that's the way to do it. um, it definitely is a weird kind of thing. There's no margin calls, there's no top ups, which I was really surprised at when I dug into it. But you're effectively paying interest on two loans simultaneously. The crypto's locked. It can't be traded. And then if Bitcoin rips 3x while your collateral is locked, you've missed the upside on liquidity. And then the premium rate like adds real cost over the 30-year term. I think it's like 0.5 to 1%. And you're locking up a lot of money for something where you could have probably just taken a Bitcoin loan, have it as a Bitcoin loan, and through Coinbase, and then just pay it back pretty quickly, or liquidate some crypto and hold it in cash for a little bit and have a taxable event, which would suck, but better in the long run, I feel like.
Yeah. So while I was listening to you, it got me thinking, like, man, it's kind of a scary thing getting what is it? I'm blanking out. Do you know what's the word whenever you are getting margin called essentially for? Is it called margin call again? When you have
Yeah, it's called a margin
positions.
where you don't
Okay.
have enough money, or it's called a top up if it depends, but it is a margin call.
Yeah. So I was thinking of a scenario, and I like to look at all these things from different angles. So I mean, bear case, because there's a bull and a bear case, or like a downside and an upside and a downside. So I think the scariest thing is getting margin called. You've told me a lot in the past about it, and me personally, I had a when Coinbase first rolled out their Bitcoin loans, I was margin called a few times in 2022. Bitcoin had reached an all-time high like the year prior, and then the following year it tanked to like the 40s. So I was getting margin call because when I got the loan, it was at 60s and then it went down to the 50s. So I had to kept on buying Bitcoin just to continue to keep the longevity of my loan. So that was a scary experience. That's probably my biggest concern when we get these opportunities, like these financial opportunities. But at
My
the end of the day,
understanding, there is no margin call.
oh really?
Like if Bitcoin drops and you've pledged 250K in Bitcoin and you get $100,000 loan to uh, $100,000 loan to cover the down payment, you won't have top ups and you won't have margin. It's just locked up in that.
That is so interesting. I don't think I was doing my research when I was doing this, but I couldn't find that. So I don't know if that's how loans just generally work, or if what was the original loans with Coinbase, they work differently. So that's actually very very interesting. That's probably
Yeah, that's why
that
that's
was
why
my biggest concern.
this loan's slightly unique because there is no margin, there is no top up. If you're doing a collateralized loan, like if you were doing Bitcoin and you were loaning against it, you got to keep your LTV, your loan to value
Right.
ratio, correct, and the collateral has to be able to cover it. That's just how you do collateralized loans. Um, this is not quite it. It's essentially everyone saying that, hey, Bitcoin and USDC is going to hold their value for long term, and they're okay on those swings to possibly have a margin, because on the flip side, they have your mortgage, they have your house, there's an asset there. So you're essentially locking up
True.
two assets. If you took $100,000 loan for the down payment and then a $500,000 loan for the house, you're paying the $500,000, but you locked up 250K of Bitcoin. Now you're locked in for $750,000 worth of assets when you've got 600K of loans. The banks are winning. You don't get paid
Yeah.
interest. They can go probably lend and play with your Bitcoin out there. Like they're probably doing some sort of lending. They're probably using that as collateral for themselves. Like the bank is winning the most here, but the house almost always wins.
Oh yeah, absolutely. It's almost like a casino, except not really gambling. But yeah, the
It's
house
all
always wins.
gambling.
True. I mean, if you look at it like that. So why don't we talk about how it works? So essentially, I think you covered the most ground. You can take out up to 2 loans. It's not as scary with making margin calls, like getting margin calls. Like if Bitcoin drops in value, nothing changes on the loan as long as payments continue. Um, let's see, crypto is returned to you once you repay the loan. So that's pretty nice. And any liquidation risks only trigger after 60-day payment delinquency, similar to conventional mortgages. So do you think that's like a healthy, reliable type of loan under those conditions?
It's a Fannie Mae loan. Like it's backed. It's the same mortgage
Just
loan
like
that
any.
anybody gets.
Okay.
If it's backed by Fannie Mae, it's a regular mortgage loan, which is big because crypto and mortgages have never gone together. If you want to use your crypto and you want to go sell your crypto, that's a
Yep.
taxable event, and then often you have to season that money in your account for 3 to 6 months, depending on what the loan provider wanted in the past.
Yeah, I believe it. I don't have I like to I like to kind of show things whenever we're kind of running through statistics, but I was able to pull down some key statistics and quotes as far as like to your to your case why it's actually kind of a big deal. So, as of Coinbase's statistics in the last few years, 52 million Americans hold digital assets, or like better slash Coinbase statistics. Like those are like the cumulative data. Rates slightly higher than the 30-year, between 0.5 and 1.5 percentage points above, depending on the borrower profile. Coinbase One members. So if you're actually a paying subscriber on Coinbase, you get a rebate worth 1% of mortgage value, which is capped at 10,000. I think that's a pretty
Wait, what?
healthy. Yeah, let me read it again. So I'm kind of just running through key statistics and quotes. Uh, this one is from Coinbase. So Coinbase One members get a rebate worth 1% worth of mortgage value, which is capped at 10%, or not at 10%, at $10,000. Sorry about that.
Is it? buying down the rate? Or is Coinbase giving you a thing to buy down the rate?
Yes.
What is the mortgage rate? Do you know?
No, I wasn't able to pull that information anywhere, but the mortgage rate, or you can rebate 1% of the mortgage value, which is capped at $10,000.
Yeah, so you're buying down the rate, but I want to know what their rate is. I'm going to look it up. What is the
Man, it might be between 0.5 and 1.5%.
that's
You're wrong.
that's the basis points on there. There's
Oh, the base.
five basis. Yeah, like that's what's added to the 30-year term. So you have a rate premium, right?
Okay. Okay, that makes sense. Okay. Clearly, I'm a fucking noob when it comes to all these mortgage shit because I've only gone like 3 loans ever. Like, if you talk to me about credit cards, like, oh, I got you. But like with mortgages, I'm actually, or not even mortgages, but with like loans, I'm actually like not that savvy at it. So, pardon my noobness there. You looking it up?
Yeah, so it's traditional. It's the traditional rate, whatever is the Freddie Mae, Fannie Mae rates. So you could run anywhere from 6.6% to 7.25%, even upwards to 8.25, depending on your credit and borrower profile. But there is a higher than a standard 30-year, half a percentage point to 1.5 percentage points, depending on the consumer profile. And then yes, Coinbase will buy your rate down slightly. So let's say you have a 7%, 7.25% interest rate. You could actually be at 8.25 because there's a premium on it, and then Coinbase will buy part of that premium down on there up to $10,000, and it depends. So you can buy basis points, and this is any loan. You can buy basis points on it and pay an upfront fee to get your interest rate lower.
Oh, okay, yeah. Okay, that makes sense. Can you do this
Yeah.
with any
So
other
essentially,
financial?
uh, essentially the mortgage Freddie Mae, Freddie Mac is putting a risk profile on this, and it's more risky
Mm,
to have this than it is not. Like I don't know anybody who would do this loan, truthfully. Like this is a bad deal
really?
across the
Mm.
board. Like it's better to probably take the taxable event, find deductions, and find tax write-offs, buy the house, and just sell some crypto in the end. Like if you're holding USDC, there's no point in locking up your money inside of secondary loan, because you have
Yeah.
the money for a down payment. That's just cash, comparative. Bitcoin, I would just sell the Bitcoin and do it. Like I understand if you want to hold it, but you got to make decisions in life, and sometimes the home decision, if you want to live somewhere and maybe the math doesn't math, and you should hold on to it and rent out there, but if you want to make that decision, I would just sell the Bitcoin, take the taxable event, and put the down payment on the house.
It's funny.
Yeah.
Sorry. It's funny you say that because a lot of the reasons why people get these loans is because they're avoiding taxable events, which, funny enough, if you look at how many people or percentage of the population who owns crypto, it's mostly Gen Z, millennials, and occasional Gen X. Um, Maybe a handful of times there will be a boomer, but it's mostly dominated by Gen Z, millennials, and occasional Gen X. But Gen Z, I'm a Gen Z. I'm cooked. I don't have as much money as people might think. My generation is fucking cooked. Millennials, they're doing a little bit better at this point, in time. So there's a good chance that, to your point, when is there a good event or time when you can get into this loan? I would say you would probably need to have a couple 100,000 of Bitcoin worth. That could be worth it, because if you could just avoid getting 2 loans, that would be amazing, and you don't even need to go through the Fannie Mae deal even. So overall, yeah, I think this is not a good deal, like you said, and you made me kind of realize as you were talking about it. So
Yeah. Like I
I mean,
wouldn't do it. Every mortgage you get is a Freddie Mac mortgage. Like they're
yep,
they're the what govern all mortgages. So there's no avoiding them. They have very strict rules post 2008. If you're buying a $500,000 house, the Bitcoin isn't helping you get the house. You still have to have income. Uh, like there's no change to the traditional finance system here. It's just bolting on crypto and bolting it on in an ugly way. And also, I just don't trust Coinbase with their loans. Like They shut down their loan
I'll
program
be
in the
honest.
past. I wouldn't be surprised that something like this happens and they, roll up the loan and say, pay it back, the secondary lien on the house, and say pay back the down payment loan early. So I just wouldn't trust him.
While we're in the subject of Coinbase, I love their exchange. I think they make that very convenient. It's my favorite exchange out of all of them. I think they're going down a messy hole by trying to become the everything exchange. And what's relevant here is you talking about the loans, because they're trying to offer all kinds of financial services in one app, which is very convenient. That sounds very convenient, but the execution, I think it's going to be messy. And I think the loan part is also messy, as someone who also had a loan with them a while ago. But yeah, if you ask me, would I ever do that again? I would say no. um, I don't know. There's just got to be better terms and conditions probably for the loans, but I mean, we'll see what happens. But while we were talking about Coinbase, let's talk about how they've been involved with the Clarity Act. They've been delaying it constantly. Now,
Have they been delaying it, or has the banks and Congress been delaying it? That's an argument, to be made there.
definitely. I'm actually on their side. I'm on the side of Coinbase on this one. A lot of people on Twitter, on crypto Twitter, are like losing their minds. They're saying, dude, just like literally fuck off. Let Congress, let the government do their thing with the Clarity Act. And I think Coinbase, albeit they own a large equity on USDC, and they rely heavily on these lending and interest gaining revenues, which will be heavily impacted by the Clarity Act with the stablecoin yield as it is right now. So that's kind of like the genesis as to what's happening with Coinbase. Um, Everyone is kind of mad. I feel like people who kind of understand the macro side of it are actually on the side of Coinbase. Like, I think you're on the Coinbase side, Leon, because you've given me, as things have been developing over the week, you've actually been saying like, man, if this actually goes through, it's actually going to be like detrimental for like X, Y, and Z things. You know what I'm saying?
Yeah, there's going to be a lot of third world effects. It's just like COVID. If you don't have yield on it, like what's the purpose of parking money in, USDC that's going to give you liquidity on network? There's a lot of little uh, parts to all of this that I think we won't see until the bill passes. And if there is no yield in that, and it looks like there was going to be no yield, and then essentially Congress wasn't going to move forward with it, that we could just it could decimate like stable coins. Like you're seeing Ramp, you're seeing all these other companies build out agentic credit cards and all of that. Stable coins are supposed to be rails for those micropayments. They're supposed to be rails for money transmittance. But if there's no incentive to keep money inside of it, I don't know. I get the depository flight argument, but there's no evidence for that. Now, there is like a privacy side of the world where who's saying like, hey, if stablecoins become fact, it's going to allow for debanking even easier and all of that, and like tracking money. So there are some worries out there, but I think most crypto people are going to support the crypto side, Brian Armstrong's side. He's the voice in all of this for us.
The Coinbase exchange is probably it's a very polarizing subject on crypto Twitter, but on the Clarity Act side, I think it's a very I've seen the kind of people who support and don't support Brian Armstrong's side. I think people who are more savvy on the macro side of financial world, or like with crypto, they're very much on the side of Coinbase. But people who are kind of just there to shit post, people who think they know better than you on the crypto Twitter, which is a lot of them, they'll actually just be like, dude, just roll it out. Like, and here's the thing with the Clarity Act, it's not just the stablecoin yield that's like the only thing passing, it's several other things on crypto. So what I have in front of us here is the CFTC 68-page interpretive guidance that for the first time officially classified 16 crypto assets as digital commodities, not securities. The SEC chairman Paul Atkins declared that the DC blockchain summit that most crypto tokens don't meet the legal definition of a security. So I'm not going to go through it all. You guys are more than welcome to look at it. We'll leave it in the show notes.
I
I think it's
also
go ahead.
we should plug the MintLocke blog. We wrote one on that one,
Oh,
breaking it down.
amazing. Do you mind pulling it up here in a moment? I don't have the link with me. Just if you want to kind of just show it off, it's kind of like show and tell. Or I
Yeah,
don't
you
know.
can go find it real quick.
Thanks. While you're doing that, 16 tokens are classified as digital commodities. I think some of these choices are very interesting. I wouldn't go with those. Like the 16 choices are Bitcoin, Ethereum, Solana, XRP, Cardano, Chainlink, Avalanche, Polkadot, Stellar, Hedera, Litecoin, Dogecoin, Shiba Inu, Tezos, Bitcoin Cash, Aptos, and Algorand. I don't know why 16 only. There's like a million tokens. Granted, most of them are shit coins and rug pulls or pump and dumps. But I think these are some of the most popular, like Stellar, Polkadot, those Hedera, those are VC backed, so I can understand their position and relevance just because they have all that money. Bitcoin is obviously number one. Ethereum, Solana, XRP, Cardano, I'll pass. Chainlink, I'll pass. Avalanche is also VC backed, so I get it. Litecoin, it
I,
has a
I
lot
think
of
they were all based on what liquidity is, and there was like a reason behind it. They said um it was like liquidity, or any of them that had been used for money transmittance or tokenization, anything relational to that, so that there's no problems out there. So like Chainlink, Ethereum, Solana, those were all out there. They're also the top, ones out there, but there were some reasons to it, I believe.
Oh, was this the article that you shared with me this week? What
Yes.
basically CFTC actually did.
Yeah, it
Nice.
breaks down the 68 page. I went and read it and then
Amazing.
had some AI help it. But it gave breakdown in there: digital commodities, digital collectibles, digital tools, stablecoins, digital securities out there. It gave the regulators, out there, for example, tokenized stocks and bonds, stable coins, it's the Fed OCC, digital tools like domains, the ENS system, any credentials, and then collectibles to NFTs, trading cards. Those are not regulated, and then digital commodities, which is the CFTC. So it really gave rulemaking out there. And then it was a really big win for self custody. And then it just gave us a framework to classify assets, control based regulatory standard, the burden, it really helps us custodial platforms must register with regulators, non-custodial platforms where you keep the keys. Essentially, we don't own the keys. They keep the keys. We have much lighter requirements. If we don't control the assets, the person controls the assets. The regulatory burden lands on intermediaries, not us.
Yeah,
And there was a lot of little things like staking is not securities transactions. Your wallet activity is not reportable by anyone but like the broker rules out there. And then DeFi protocols are building on legal ground. These protocols that we do use, have legal groundwork. There's like automated non-custodial strategies, are not investment advisory services. So essentially what we're building do not need RIA registration anymore, and no
amazing.
fiduciary duties or any of that. And then there was just a few other things out there, like who's doing it, like Chris Atkins acknowledges, this. So there were some really good things. And then, the bigger picture is like after FTX, self-custody became, a survival strategy, for most. And this really
For sure.
gives people, some sort of ability to have self custody and have rules that essentially don't put onus on, like platforms saying, hey, you do have to report KYC and all of that, because that was really where everybody was kind of saying and heading towards. But really good article. I'll link it in the notes. I think it's even better because I helped write it. But I think that breaks it down pretty well.
You're a really good writer too, so I trust your choice there. Um, yeah, I think that was honestly one of the best breakdowns I've ever heard in my life. So nice work there. Especially when you're condensing like a 68 page long, documentary and brief from the CFTC. Like, yeah, I think that was an amazing breakdown. So I'm not biased, but check it out if you like, if you want to learn, go more into detail there. So you covered five taxonomy, or five assets that are encompassed within this bill. Those were NFTs, uh, digital collectibles, digital tools, stable coins, digital securities, digital commodities, essentially, and kind of like
Yeah.
what falls under each. Um, we're seeing a lot here, and yet people are so focused on the staking because I guess it's gone the headline, and yeah, people use stable coins a lot. I think crypto is still a prosumer tool. It's growing a lot. It's eventually going to get embedded in everyone's tools, whether they like it or not, and it's going to be for the better, I believe.
I I saw a Twitter comparison between stablecoins and 3D printers. Everybody said 3D
Really.
printers were going to be like the way to, everyone can print parts and do all this stuff in their house. 3D printers are fun for a certain segment of people out there, like the prosumer that, know how to do CAD, or, people that are exploring and just having fun. But 3D printers really win on the enterprise side. They're manufacturing. We
Mm,
know somebody who's, manufacturing stuff with the 3D printers. We see a lot of that. And I think that's what's going to happen with stablecoins. I don't think stablecoins are going to become such a consumer thing. Just the way that this bill is and just the way that stable coins are, I'm thinking it's going to be a very big remittance and back end, thing.
mm,
But I
yep.
don't I don't think somebody's going to go, oh, I'm going to go, get stable coins or something. They're going to essentially, that is going to become an enterprise thing. And then the other part that I saw that was really interesting on that thread was how crypto showed every single platform out there that they could be a bank. So, DoorDash, you can keep your money there. Gusto, you can keep their money there. Whoop, whatever it is out there, they were like,
Oh
hey,
yeah.
now you can keep your money there. X is talking about keeping your money there. I think crypto showed everybody that it makes sense to, hold and keep the money versus letting a traditional bank, keep it. The biggest winner is going to be
Yeah.
the like coastal river who holds all this money and everything out there. But I think the net is stablecoins is going more enterprise. It's going to be, sad to see, but I don't think everyone's going to be just like transacting in stablecoins based on this act now.
I think just crypto is bigger outside of the US because the dollar is so pervasive, like it's everywhere and it's very dominant. But outside of that, like, the Philippines and Eastern Asian countries, stable coins and just crypto in general would be very popular there. So yeah, remittance would be amazing there, to your point. Let's see. We have one more subject to talk about. I think we broke it down pretty well. Did you have any other thoughts with that point?
No, you're good. Small, like a little admin thing. You're
Sure.
tapping on the desk, and it's
Oh,
actually popping really heavily inside my ear.
oh,
Like
my
I
bad.
think it picks up a lot out there. Just an FYI. I know Corey has told me about
Oh, well, I sorry about that. Um,
it. Yeah,
all right,
Corey
I
will
won't do
be like,
that. That's funny. I'll just fucking slap my desk next time. Um, all right, so we talked about all these different tokens, and we even included Solana, it being part of the commodities, digital commodity part of the Clarity Act. With that said, let's talk about the Solana Developer Platform launch, which, uh, am I sharing my screen? Uh,
not yet.
you're right. All right, I'll share here in a moment. All right. So with the Solana Developer Platform launch, as of March 24th, the Solana Foundation launched the Solana Developer Platform, or SDP. It's an API-driven toolkit for enterprises to build tokenized assets, stablecoins, and payment products on Solana. We learned this from not CoinDesk, from Decrypt. Let me share my screen. So here's the headline, and you guys can read it. It'll be in the show notes. But yeah, what the SDP actually is a one-stop shop for API layer that bundles infrastructure from 20 plus partners into a single interface. So, like I'm blanking on their names. It's like Western Union, MasterCard, you name it, like all those providers. Those are some of the big ones. I'll go
Yeah,
through the list in a moment.
MasterCard is using it right now to do all their stable coin remittance or settlement on there.
Yep.
I believe WorldPay is applied. Western Union has always had
WorldPay.
strong cross border. Yeah,
Oh, okay.
WorldPay.
Yep.
Um, uh, Western Union's always had strong cross border like money transfers. That's like their business. So
Yep.
this is interesting that they're finally adopting stable coins. Like I saw somebody tweet like, "Oh man, this is a huge thing." But Western Union's been looking at crypto since Ripple in
Yeah.
2018 to 2020 time. It didn't save them money, so should be interesting. But I know Solana processed like $650 billion worth of stablecoin volume in just February of this year. So it's a massive stablecoin platform, and Solana for the shit coins and everything. They're still a really big player.
Yeah. Solana right now, all it's known for is Solana, or it's pump.fun, and that's where they get a lot of their liquidity and a lot of their volume is just from pumping up meme coins. So this is actually pretty interesting. I think they're trying to turn face. They're trying to, be more appealing to the masses, and definitely with the enterprises. I think they're doing really great there. The issuances are tokenized deposits, stablecoins, real world assets. The payments are through fiat plus stablecoin flows, on and off ramps, essentially. Trading, atomic swaps, vaults, on chain, foreign exchange, which is coming later this year, actually.
I
Great
want to
news.
back up real quick on the pump fund
Sure.
because I want to fact check you. Um,
Sure.
Stable coins have always been bigger than pump fund on Solana, and I had to look it
Really?
up. Stablecoins on Solana, it's 11.7 trillion stablecoins were transferred in 2025. And, that was bigger than previous. And then Pump Fund barely surpassed like 600 or like $1 billion in like DEX volume, in there. So vastly different things. I think public
Okay.
perception is what comes. And I think that's what you're seeing more of.
Yes.
But like the cold hard facts is Solana is a very reputable one. Their public persona is casino and fucking all of that. But in reality, they are a big financial player. Like I just think that they have bad marketing.
I believe it.
Clearly.
Yeah, clearly. It's so interesting. I really like Solana when Pump.swap or Pump.fun, and then Pump.fun got massive. And then they started creating their own little ecosystem of tools. Like Pump Swap was their most recent one where you can swap any tokens, and you know, very interesting. They make a shit ton of money, which is crazy. But no, you're right. Like 650 billion came in volume as of February this year, just from stablecoins on Solana. So that is noteworthy. That is
Yeah, so like a
this.
billion or 2 billion from Pump Fund versus 11 trillion in stablecoin. Also, like most people lose money on Pump Fund, and it is a casino, and I think
Yeah.
it is a net bad for crypto. But it punches way above its like cultural significance, punches way
Mhm.
above like actual volume. It's the classic, the minority has the biggest vocal. They're the vocal majority, like actual minority on Solana.
You know, Speaking of that, I've always said, or I've kind of drank the Kool-Aid that I'm seeing on crypto Twitter from like the crypto leaders, Brian Armstrong, ZZ. They say there's going to be an agentic economy, an agentic economy where people are going to be able to program their own little agents and then just automate a lot of their finances, their trading, their swapping, you name it. I think automated trading is going to be a massive thing. That's why we're very bullish on MintLocke. Um, we're trying to prove a concept with Bitcoin Autopilot. So, agents kind of look at the market, they monitor the situation, and then they control your bags within your own permissions. But that's not a self-advertising. But my point here is it being an API layer, I think it's very massive. People don't like to configure MCPs, but if we could enable like them enabling it through an API, granted this is more for enterprises, but can you imagine if you give this access to an agent? Like there's a lot of opportunity there.
I like the agent part. I think again like the Kool-Aid is that everything's going to become an agent and all of this. I think
Yep.
I think we're going to see agents and we're going to see a lot of transactions happen autonomously.
Yep.
But I do think it's going to be like a winner take all at some point. Like where does the money flow?
Yeah,
And I
like a
think
monopoly.
MasterCard is kind of at the forefront of it. Visa's kind of the forefront of it. Um, I think that there's just so many like chains and everything that essentially whoever like gets out there, like the Solana Developer Platform, the money's going to flow to one spot, and I could see, you know, Base possibly losing, or Solana. Like you're not going to see all of this thing. It's just like the whole world operates off of US dollars because it's easy when you're in one currency, versus if you've got multiple stable coins and multiple chains and all of that, that's where it gets really confusing. So I think Solana is early and staking out there and saying, hey, this is still like a big part of it, but also this is just an early test. The trading models aren't live yet. There's a significant piece of functionality still pending, and then also Solana's network fucking history is terrible. Like,
Yeah,
you
it's
know,
very
it's
centralized
just
actually.
terrible.
It's very centralized. It goes down quite a lot. And I don't know if people know that, but I'm glad you mentioned that. Also, Ethereum still has over 50% of the RWA tokenization market. Solana is at 6.3%. And
Yeah,
when I say Ethereum,
Ethereum takes all DeFi in general. I think it controls like 80% of all DeFi.
yeah, pretty much. And it's not just like Ethereum layer one, it's like all the layer twos. Like we were, you and I were talking about the
Base.
Robinhood change a while ago. Also Base. I am a little bit, frustrated at Base how they've been doing like a lot of pivots lately. Like they have like this identity crisis. I think they will do a lot better if they start incorporating real world assets. They're kind of falling behind on that. But that's just my personal grab with it. But no, I think this is very interesting. Solana is definitely trying to Solana is definitely trying to position itself as the DeFi big player right next to Ethereum, it seems. I don't know how far that can go though, because Ethereum is just everywhere. Like it's on layer two, so it's got its own layer one. The token is used for gas fees and everything. So Solana is just more Solana has more liquidity, and it also, or not more liquidity, as in like compared to Ethereum. Like Ethereum, you're not going to beat it, but Solana is just better UI UX cases, has better that. Ethereum is kind of old, so a lot of the DeFi that exists is still with the allow access, copy your 0x address. It's very clunky UI UX compared to Solana.
That's fair, and I think that's there. But I keep seeing this in the crypto world, and I've heard it a few times, and I've conveyed the message to you, is that people are upset with crypto becoming like commercialized and
Yep.
centralized and all of that, and the people that are really building on the networks are building on Ethereum because of the decentralization. There's been no downtime ever. I don't think Ethereum's ever gone down because of that fact. um
Yep.
and Solana is just very centralized. It's controlled by VCs. There's a lot of worry about that. Enterprises need 99.9%, 99.999%, uptime. And if it's just not going to happen, like these banks aren't going to rely on something there. But again, this is a test. It's just turned on for, these folks are just testing it. There's major, like gaps on what's actually being, pushed out there, functionality wise. And this is just a sandbox. Like actual production deployment, it at MasterCard scale is a different ball game. Like that's a different animal. Like that's from owning a turtle to like fucking owning a tiger or 17 of them.
True. Very true. We'll see what happens, man. We'll keep monitoring the situation, and with next week's episode, or in the next 2 weeks episode, we're trying to keep it at a 2 week cadence. Um, we'll keep you guys updated as news develop. But yeah, before we close off, let's see. I did want to say one thing. So I want to include this new section. It's called like kind of wrap it up, and what we're seeing could develop as the next story, as a story in the next 2 weeks or so. Um, I'm gonna run it. I mean, you can look at it at the bottom on the document if you have it open. Um, I kind of want to talk about that real quick, just to kind of close off, and then we can just say goodbye. Do you think that's a good plan, strategy?
Sure.
Sick.
Let's roll.
All right. So we will continue monitoring the situation here. And something that we could potentially talk about in 2 weeks is one, Morgan Stanley has ultra low fee Bitcoin ETF filing, which could potentially conflict with BlackRock and Fidelity with their Bitcoin ETF. And then the Clarity Act, sent it back in committee. There's going to be a follow-up in the second half of April, just as far as like the pipeline of pushing out the Clarity Act. Fannie Mae mortgage product rollout time, the timeline and the early adoption numbers, we're probably going to get an update there as time goes on. So we'll keep you guys updated. And then the Solana SDP moving forward from DevNet to production, we'll keep monitoring the situation there and let you guys know how it goes. Yeah. So we'll be seeing you guys next time.